Hi everyone. We are now in this particular video going to discuss about the CA final law amendments. Right. I have this file with me. You all can download the same from Institute's website. But I have simplified the same notes into the PDF that you can see, which is displayed on the screen. If you want these notes, if you find them easier, then definitely you can download these notes also from my Telegram channel. Now, amendments. There aren't many amendments. Let me give you a sigh of relief. Although you have to study a major portion of overseas investment rules and regulations, which I'm not going to discuss in this particular video. So we are discussing other amendments apart from FEMA, you can say, because FEMA has that overseas investment rules and regulations which have been incorporated new to your syllabus, and you have to undoubtedly read it, right? Don't fall into the trap that you don't have to read it or that is not in your syllabus. No, you have to read it since it has been notified, especially in your amendment sheet. So you have to read it, right? I will teach you that in such a manner that you just do that particular class and it will all be sorted. You don't have to read it, you don't have to learn it, you don't have to put extra efforts for that, but not in this class. In this class I have come up only with other amendments. And what are the other amendments? Again, other amendments I have classified into old and new ones, right? Since this amendment sheet incorporates amendment from long time, I have classified into two parts. Although I'm going to teach you everything, I'm going to discuss everything in a brief manner and in a manner which is going to straight away hit you and it will all be clear. Right. Now, we have amendments basically in the first chapter of directors, meetings, foreign companies, and you also have in miscellaneous chapter that is nidhis, although they are again old amendments, but I'm going to discuss the same, right? Then we have securities law. We have amendment in SEBI loader regulations. Again, these are the old ones. And thereafter, when we come to economic laws, we have amendment majorly in FCRA and IPC. So that is the two things that we have. These are the two things that we have to discuss, right? I will also make you mark which amendments are important from examination perspective and which are not, right? So without wasting any more time, we'll come straight to the point, and we will start with the amendments. Hope your preparation is all geared up and going well, right? Okay. So the very first amendment, which is an old one, so I'm not discussing it in immense detail, but yes, we all know about Rule 6. Anyone who is willing to become an independent director has to go for certain compliances, right? What are the compliance? We all know about online proficiency self assessment test, which we also call as OPSAT, right? So that test has to be qualified by the person, right? But there are certain exemptions. So there are certain people who are exempted that you do not require to appear for OPSET if you already possess a certain qualification and experience, right? So in the same regard, we had a clause B where in the same thing was written, but it has been substituted. Why it has been substituted? Because earlier they had specified the ministry also. If you are a director or at the equivalent stage in Ministry of Corporate Affairs and Ministry of Commerce and Industry, so other ministries were also specified. Now they have been removed. It has been specifically, it has been straight away written that if you are a director or equivalent in any ministry or department of central government or state government and you have this experience, what experience? If you have the experience relating to commerce, corporate affairs, finance, maybe you're sitting in some other ministry, yet you have that experience in the field of commerce. So you have that experience, you are eligible, and you are not supposed to appear for that OPSET examination. You are exempted from that, right? You get my point? So, very simple and clean amendment and not so important. So, writing it over here, not important. Okay, moving to the next one. Again, this is an old amendment and we have discussed it before, but I'm again going to tell it to you. Carrying that exemption. See, if you look at this amendment sheet, you'll find amendments here and there. I have classified into chapter wise. So if you are reading this particular sheet and referring to my amendment video, please pause for a moment and coordinate which point am I discussing. Okay. Now, again, there are certain people who are exempted from appearing this OPSAT. In the same league, we have the individuals like us, right? Although I'm not in practice, but a practicing chartered accountant, a practicing cost accountant, a practicing company secretary, an advocate of a court, if they have 10 years experience, they're not required to pass OPSAT, right? Okay, fine, ma'am. Now, this is OPSAT. Now comes the new amendment. This is also not important, but then this is important. Okay. And okay, fine. Now, what is this written? See, if I talk about the earlier times, we all know that you have to get your self enrolled for this OPSAT, and you have to file an application for inclusion of your name in the data banks. You have to appear for OPSAT, and if you do not pass this examination, then your name will be removed. That is the old rule that we have been studying for a while, right? Now, again, undoubtedly, your name will be removed, but earlier you did not have any other opportunity. You had to apply fresh. If you do not comply with the requirement given in rule 6, then your name was removed, and thereafter what you had to do is you had to make a fresh application. But now they have given an opportunity to such individuals that if your name is removed, then what you can do is you can restore your name. How you can restore your name? You have to make a fee payment, and there are certain conditions which need to be complied with, and thereafter you can restore your name, which gives you a sigh of relief. Why? Supposedly you file a document or file an application in the government department. Just imagine how difficult things are when you're filing an application. This information is needed, this information is needed, attach this particular document, and you have done the entire formality, and thereafter you could not appear for OPSAT, or you could not clear whatever it is, right? And thereafter your name was removed. Now you're worried that, oh my God, all those formalities again, the fee payment again, everything has to be done. This is really not fair. So now they have given you an opportunity. Okay. So any individual whose name has been removed, I'm reading it from here, any individual whose name has been removed from the data bank may apply for restoration of his name on payment of 1,000 rupees, and the institute shall allow restoration. Okay, so it will be allowed, but your name will be entered in a separate register. Okay, and for 1 year. During that 1 year, you have to apply, and you have to appear for that OPSET and clear the same. If you do not clear, then your name will be removed. It is like keeping your name on hold for 1 year if you apply for restoration. So your name will be on hold for 1 year, and within that 1 year, if you appear for the examination and clear the same, okay, fine, your name will come back to the main register, and whatever fee you had paid initially, that will be applied for your tenure. But if you fail to do again that, then your name will be removed, and thereafter you have to apply fresh. Fine. So what are the conditions? What are the conditions? Condition number 1, the name shall be shown in a separate restored category for 1 year from the date of restoration, and thereafter name will be included only if he passes, and in such case the fee at the time of initial registration shall continue to be valid. If you had paid the fee for 1 year, it will be valid for 1 year, right? And in case you fail to pass the OPSET examination within 1 year from the date of restoration, your name shall be removed from the data bank, and you have to apply fresh for inclusion of your name, just like it used to happen before this particular amendment. Clear? Okay. Next. Now, appointment of director, requirement of Ministry of Clearance for the appointment. Now, what is it? I will just take a while to explain you because you are final students. You must know the bigger picture. It's not just enough to see. Anyone who has done class from me, they probably know that I always take time out, maybe a short time, to make you understand the logics, because it's very important. Then only you can understand law. So it's very important. And I will just tell you, MCA has brought, if you want, you can note this, because since the entire syllabus is not in your course, I'm not going to tell you everything. MCA has made amendments in two regards: in the investment field as well as in the management field. What, ma'am? See, Government of India is closely monitoring the inflow of funds from our neighboring, not exactly I would say neighboring countries, from the countries which shares land border with India, right? Government is closely monitoring the inflow of funds. That means it's talking about the investment, and it's also talking about the people from coming from there and managing our entities, right? Undoubtedly, the people who invest in our entities, they have some power. The people who manage our company, like the board of directors, they also have some power, right? So we Indians are giving our powers to citizens or to residents or to companies, entities which are in such countries who share land border with India. Government is concerned about that. Okay, so from which sources do you invest? At the time of incorporation, you may be becoming the first subscriber. Maybe later on, when the company issues shares through private placement, at that time also you can invest. Some people transfer the shares even at the time of merger. So, at all these places which you're not reading right now, you have read it before. At all these places, amendments have come place, right? Now, if I'm incorporating a new company and the first subscriber is a resident of a country which shares a land border with India, maybe you could say it could be China, it could be Bhutan, it could be Nepal, it could be Myanmar, right? It could be Afghanistan, it could be Pakistan, right? So if this is the case, then that permission from government is needed. Likewise, when I talk about management, so if you are hiring a director who belongs to such country, so if I'm talking about the director, um, if I'm talking about the director, and maybe you director plus 10, right? Director plus 10, existing company and new company. Okay, so if I am talking about the director, then also you need government's permission. That is what the amendment is all about. In fact, both these amendments, Rule 8 and Rule 10, right? In Companies Appointment and Qualification of Director Rules 2014, one is about when you appoint a director, Section 152, and the second is about DIN. So when you obtain the DIN, right? In case the person seeking appointment is a national of a country which shares land border with India, you can of course write example over here. Example China, example Bhutan, example Nepal, example Myanmar, right? Bangladesh, etc. Right? Sri Lanka does not share land border with India. Now, in fact, you will see a lot of amendments being made in FDI also. Government is very much concerned about FDI coming from these places. Now, if this is the thing which is happening, then that person needs security clearance from Ministry of Home Affairs, Government of India, and that is also going to be attached along with the consent. So we have consequential amendments in our forms as well. We have amendments in DIR 2, we have amendments in DIR 3, right? So we have such applications also amended accordingly. The same goes for Rule 10. Okay, provided that when you're making a DIN application, and you're making a DIN application in this case, that means you are a national of such country, then your DIN application must be accompanied with the permission granted or the clearance obtained from ministry. No application number shall be entertained in case of person applying for DIN is the national of a country which shares land border with India, unless necessary security clearance from MHA, Government of India, has been attached along with the application for DIN. So, what are the two things? And these both consider them as not so important, but not something that you can just, you have to keep this in mind. National of country sharing land border. You can't be a director without obtaining that security clearance. You can't be someone who can get DIN in India unless you obtain that permission or security clearance from MHA. So Ministry of Home Affairs, Government of India will give you a clearance, and that has to be attached along with your consent, that has to be attached along with your application for DIN. Fine. Okay. It's not that you have to get separate clearance. You get the clearance, you have to attach it. I hope this is clear. Right. So these were the amendments in the chapter of directors. So one very important amendment, this one, and these not so important, and others are definitely not so important. Okay. Now the chapter of board meetings, I'm not even discussing this amendment. It's a very old amendment, although I have discussed some very old amendments from the chapter of directors, but I'm not going to discuss this one now. It's just that earlier there were some matters which were allowed through, which were not allowed through video conferencing. So specifically, we had certain matters which were given in Rule 4, which were not allowed to be dealt or taken up when you were conducting a meeting through video conferencing. Now they're allowed because Rule 4 has been omitted, right? There are no amendments from chapter number 3 to chapter 7 of company law. Chapter 8, producer company, undoubtedly it's deleted from your syllabus. Chapter 9, although you will find in the amendment PDF, there are two amendments which are given, but of course, the very old amendments which are covered earlier, and they're not even very much relevant for examinations. I'm not taking it up. Now, the amendments with respect to Nidhi, although these are also old amendments, but not very old amendments, they had come recently only in the last attempt. So I am discussing those amendments and consider them important as well for your examination as well. Okay, even if you're going to appear for May 23 examination. Okay. Now, what are the amendments? Let's discuss them one by one. The very easy ones, not at all difficult, and you'll be easily able to recall if you have read Nidhi properly. Now, what is Nidhi? Nidhi is a type of company which promotes savings, and we know that now anyone who wants to be a Nidhi company, they have to get that recognition. Right. So they have to make an application, and unless they're recognized as a Nidhi, they cannot be called as a Nidhi. This comes under the chapter of miscellaneous professions. Right. So we have just one section in Nidhi, but we have rules, and rules are very important in the chapter of Nidhi or in the topic of Nidhi. So there are amendments in the rules only, because rules tell us what is the requirement, what has to be complied with, how you have to deal with it. Right. Rule number 3, definition of branch has been inserted, which is not important and it doesn't say much thing. It only says that branch means any other place other than registered office. Undoubtedly, yes, that will only be a branch. Okay. Now, minimum paid up capital of Nidhi company has been enhanced from 5 lakhs to 10 lakhs, and you get a time period of 18 months to get to the new limit, right? Because immediately you might not be able to enhance it. So you get a time period of 18 months from the commencement of Nidhi rules. Now, I want everyone to please write it if you do not know this or if you haven't written this anywhere. I want everyone to please write over here something which is very, very, very important. 19th April 2022. Just a second, I'll make you write this one. applicability, write it like this, applicability of Nidhi Amendment Rules 2022 is with effect from 19th April 2022. Because if in examination any MCQ comes or anything comes, you might need to refer to this particular date, because every compliance has to be met within a period of 18 months from the date of such commencement of rules. Okay, so you must know when these rules have been made effective. So they have been made effective from 19th April 2022, and thereafter you'll calculate the date. Okay, now next is rule number 5. Now, any Nidhi company which is incorporated after these Nidhi amendment rules, that is after the date of 19th April 2022, they do not have to comply with Rule 5. What is Rule 5? Rule 5 stated a lot of requirements like net owned funds, like deposits, like the number of members which you had to achieve, 200. All that requirement is now not applicable. Okay, so ideally rule 5 is however going to be eliminated, but over in the long run, right? Because we still have the existing companies who need to comply with it. Now, rule number 6. Rule number 6 states the restrictions and prohibitions on nidhis, right? So we have a new clause which have been inserted and an old clause which has been substituted. Okay, so first of all, the old clause which has been substituted, no Nidhi shall acquire or purchase securities of any other company or control the composition of the board of directors in any other company in any manner whatsoever, or enter into any arrangement for the change of its management. I am going to recall the old one also for you. The old clause stated the same thing, but also gave us permission that if we pass special resolution and obtain the approval of RD, we can acquire so. Right now, there is a complete prohibition. So, if you want, you can just write over here old. It was permitted by passing SR plus obtaining approval of RD. RD means regional director. Approval of regional director. Okay, very simple. Now the new clause has been inserted. That means one more restriction has been imposed on Nidhi companies. What is the restriction that has been imposed? That you will not raise loans from banks or financial institutions or any other source for the purpose of advancing loans. We all know that Nidhi is a type of company in which you have members, right? They contribute and they also take loans. So if Nidhi company, the whole purpose of Nidhi company is to create the pool for the members, right? And that pool cannot be created from borrowed funds. So you cannot raise loan and thereafter pass on this benefit to your members. No, this is not going to happen. Okay, the whole essence of Nidhi company will be lost. So this is something which is not permitted, right? Rule 8, which talks about the membership, it tells us that you are not supposed to transfer 50% of your shareholding. What does it mean, ma'am? See, a member shall not transfer more than 50% of his shareholding during the subsistence of such loan as the case may be. What happens is, you become the member of the company, then you get or you're exposed to the benefits that the company is giving. So you take that loan and thereafter you transfer your shareholding. That means you have become the member of Nidhi company just for obtaining the loan. And once you've obtained the loan, it doesn't matter, right? So you just forget about it. So that is something which will not be allowed. So you will not transfer more than 50% of your shareholding. But having said that, there is one more point which you have to understand, or another angle which you have to understand. What is it? That the member shall retain the minimum number of shares. So in rule 10, you have read about 10 and all, right? So that minimum number of shares have to be with you. Supposedly, there the minimum number of shares which you have to hold is 10, and you hold only 15 shares. So you cannot transfer 7 or 8 shares. You cannot transfer 7 shares because minimum number of shares that you have to hold is 10. right? So when you have to hold minimum, you have to get hold of both the compliances, right? You have to remember that rule 7 states the minimum number of shares which have to be required at all times. Now, after that minimum number of shares, if it is more than, say, it is 70%, so you still can transfer around 20%, but you cannot transfer more than 50%. So you have to keep this in mind. Clear? Net owned funds, earlier the requirement was 10 lakh, which has been doubled to 20 lakhs. And again, for complying with this requirement, you get a period of 18 months from the date of commencement of such rules. Okay, rule number 14. See, you cannot withdraw your unencumbered term deposits. However, temporary withdrawal is allowed, and for that, you need the permission or you need the approval of regional director, which is as it is. There is nothing new which has been told in this. However, what is new is this: by making application in form NDH2. So this can be asked as an MCQ, that in which application or which is the form number wherein you make an application for temporary withdrawal of unencumbered deposits. So you have to remember it's NDH2. Earlier also approval was needed, now also approval is needed. There's nothing new in that. Fine? Okay. Now, rule 15. Loans in case of joint shareholders. See, if I am jointly holding the shares in a Nidhi company and we want loan, now the loan shall be provided to the member whose name appears first. So there are many joint holder of shares. So whosoever name is appearing first, that person will be entitled to the loan. The loan will be processed in his name. You can say that, right? So the loan shall be provided to that particular member. And lastly, we have Rule 18, which talks about dividend. Again, an important one from the perspective of MCQ also. A Nidhi shall not declare dividend exceeding 25% in a financial year, no further approvals. You have an upper ceiling, which is 25% that has been given to us. Our dividend declaration cannot exceed or cannot go beyond that point. Okay, so 25% is the maximum dividend which a Nidhi company can give. You have to remember that 25% maximum dividend. Joint holders, whoever's name appears first, will be given loan. Application for withdrawal of unencumbered deposits in NDH2. Net owned funds 20 lakhs. Not transfer more than 50% of shareholding during subsistence of the loan. Okay, then complete prohibition on acquiring securities of another company. Complete prohibition. Then this is not so important. Paid up share capital, paid up equity share capital 10 lakhs. Okay, so whatever I have repeated is important from the chapter of Nidhis. You have to keep this in mind. Fine. No amendments from chapter 11 to chapter 13 of company law. Thereafter, we come to part 1, section B of part 1, that is securities law. In securities law, SECRA has been deleted, that we all know, and we have some amendments in SEBI loader. Again, these amendments are mostly the old ones that we have discussed, but I'm repeating them again. The very first thing, we all know that of the different platforms which are available for trading, we earlier had a platform called as institutional trading platform, which is there, but it has been renamed as innovators growth platform. I've even explained you the logic why it has been renamed. So ITP shall be substituted with IGP, right? That is very simple and nothing special amendment. Then when we talk about the applicability of these loader regulations, which is given in regulation 3, there is clause B in subregulation 1, which has been substituted, and there is simple thing. See, non-convertible securities. Earlier, there was clear mention non-convertible debt securities, redeemable preference shares, debt, and a lot of things, right? Now it is plain and clear non-convertible securities, so nothing important amendment at all. We have an insertion of sub-regulation. The provisions of these regulations, which become applicable to listed entities on the basis of criterion of the value of outstanding listed debt securities, shall continue to apply even if they fall below the threshold. So if these regulations have become applicable because you have crossed a particular threshold, even if you come below the threshold, it will continue to be applicable to you. This is not at all important amendment. When we talk about audit committee, at least two-thirds of the members of audit committee shall be independent directors. So this is also the old one, but I am just recalling this. So this you have to keep in mind. This is something which is important. Again, this is something which is important. So earlier it was 50%. Now it is at least two-thirds of the directors have to be independent in nomination and remuneration committee. See, I am considering the fact that we're just discussing amendments and you know the background. If you don't know the background, it will be very difficult for you to understand where the part has been amended or what part has been amended, right? We know about audit committee. We have read it in Companies Act. We know about nomination and remuneration committee. That also we have read it in Companies Act. At the same time, if you're listed company, if SEBI loaded regulations are applicable to you, then you also have to comply with these regulations. So we have audit committee under regulation 18, which states that at least two-thirds of the members. So now two-thirds member needed in audit committee and at least two-thirds needed in NRC also. Earlier it was 50%, now at least two-thirds needed in NRC also. Okay, fine, ma'am. Now comes your risk management committee. What has changed in risk management committee is that they will meet at least twice in a year, and there are two additions. What are the additions? Quorum for meeting of risk management committee, that is RMC, shall be either two members or one-third of the members of the committee, whichever is higher. So you have to remember this, including at least one member of the board of directors in attendance. And it will be conducted in such a manner that on a continuous basis, not more than 180 days. So between any two consecutive meetings, there shouldn't be a gap of more than 180 days. That is what they're trying to tell us. Risk Management Committee shall meet at least twice in a year. Quorum will be higher of two or one-third. One-third, supposedly, I can say there are 9 members in the committee, so one-third comes out to be 3. 3 or 2, whichever is higher, higher comes out to be 3. So 3 will be the quorum for meeting of RMC. Okay? And whenever you meet, you have to meet at least twice. The gap between your two meetings should not exceed more than 180 days. Clear? Okay. Now, provided that the role and responsibilities of RMC shall mandatorily include the performance of functions, forget that. The provisions of this regulation shall be applicable to top 1000 listed entities based on market cap and high value listed debt entity. Now you might ask me, ma'am, what do you mean by high value listed debt entity? So you write it. It's also called as HVDLE. Don't use the short form. I'm just telling you, high value debt listed entity. Listed, it's non-convertible debt on RSE and has outstanding value of 500 CR and above. Ma'am, do we need to learn this? No, you don't need to learn this. I am just telling you for your own reference. Okay, because later on when we go about and talk about corporate governance report and compliance, there also you will read this word, high value debt listed entity. So you should know. Okay. So such type of entities as well as top 1000 listed entities. So the provisions of this regulation are going to be applicable to that. The risk management committee shall have powers to seek information from employee, outside legal, etc., etc. So this is not something which is very important. Okay. I hope this is clear. So, in examination, what can be asked to you is that maybe which type of companies have to constitute a risk management committee. So, you must understand and keep this in mind that we have a clause 5 which states that, or which provides for constitution of a risk management committee or such committee, and it is mandatory for the top 1000 listed entities and high value debt listed entities, right? Earlier, if we talk, or initial times, you know that it was applicable for only top 100 companies. Now it is top 1000 listed entities and a high value debt listed entities. So these type of entities have to compose, they have to form a risk management committee, and they have to comply with the meetings. That means they have to meet twice every year. It was earlier, there was a requirement of just one meeting every year. Now, considering the risk and considering how much exposure is there for the companies, there are two meetings which must be done. Their gap should not exceed 180 days, and like things what we have just discussed, right? Okay. Now, regulation number 24. Regulation number 24. A listed entity shall not dispose of shares in its material subsidiary. We already know that, right? Unless we pass a special resolution, we cannot dispose of our shares in material subsidiary. However, there is slight change in the limit, right? What is the slight change in the limit? If that results in reduction to less than or equal to 50%. So if it resulted in coming to 50% of your holding, then that was something which was allowed without even SR. But now or equal to has been added. So now a listed entity cannot dispose of shares in its material subsidiary if that results in reduction to its shareholding to less than or equal to 50% without passing SR and thereafter, right? Regulation number 26. SEBI loader imposes a limit on the membership. That means one particular director cannot be a member in more than 10 companies, 10 committees, right? And if you are a chairperson, then you have a further limit. But there are certain companies which are excluded for the count, right? So all other companies, including private company, limited companies, foreign companies, high value debt listed companies, and companies under Section 8 of Companies Act 2013 shall be excluded. So slight change over here. Now, quarterly corporate governance report. Now, the listed entity, you have to submit quarterly compliance report on corporate governance within 21 days from the end of each quarter. Okay, so this is something which you have to remember. Important. And now in your corporate governance report, you also have this stakeholders relationship committee. So you have to write the details about this. This existed earlier also, slight change. And you also have to give details of your risk management committee that you have formulated, the brief description, composition, names of members and chairperson, and meetings at attendance during the year. So this also has to be stated. Fine. I hope this is clear. Now, in FEMA, when we come to Part 2 economic laws, I've already discussed this before, that in FEMA we have two types of amendments. We have overseas investment rules and regulations which have been added to your syllabus, but we are not discussing in this particular video. Apart from that, we have slight change in external commercial borrowings. Nothing much. You just have to understand, and you just have to keep one thing in mind, that we spoke about a benchmark rate called as LIBOR, right? You know, London Interbank. Now, this has been discontinued, or this has been changed. What is that rate all about? We know that when we borrow, what is external commercial borrowings? These are borrowings made from external source, right? So we are borrowing our money from an external source for our commercial purpose or commercial usage. That is external commercial borrowings. Now, this may be bought in foreign currency, and we have also discussed about trade credits. What are they? The whole point is that we discuss about the interest, and we have an all in cost ceilings which have been given to us, that okay, your cost cannot exceed this particular rate, right? Rate, that means a specific rate has not been given, like we are not being given 12%, we have not been given 10%, we have been given a reference rate, and which is a benchmark rate. If that increases, maybe your all in cost ceiling also increases correspondingly, right? So we have a benchmark rate. Earlier, we adopted LIBOR as a benchmark rate. Now that has been changed. So now we have an alternative reference rate of a 6-month tenor or any widely acceptable interbank rate. Now, do we need to know, ma'am, which alternative reference rate has been used? No, you don't need to know that. You just have to keep one thing in mind, that instead of LIBOR, now we have the benchmark rate shall refer to any widely acceptable interbank rate or ARR, that is alternative reference rate. Okay. Now, since LIBOR has been discontinued and you now have ARR, that means your benchmark rate has been changed. Considering that change in benchmark rate, government has increased the all-in cost ceiling. What does it mean, ma'am? See, earlier we had benchmark rate plus 450 basis point, right? So that was the upper limit which was given to us. Now that 50 basis point addition has been done. And we also have 100 basis point addition which has been done. So now what you have to remember is the all-in cost ceiling. This is the new ceiling that you have to remember. This is not so important, but this is important. Okay, what is this? For new FCY ECBs, the benchmark rate is, the all-in cost ceiling is benchmark rate plus 500 basis point. For new trade credits, benchmark rate plus 300 basis point. For existing ones, benchmark rate plus 550 basis points and benchmark rate plus 350 basis point for trade credits. Okay, so this is something that you have to remember. Clear? Okay. Now, SURFACE has been deleted. PMLA arbitration, you don't have any amendment. Then we come to Foreign Contribution Regulation Act, FCRA. Okay. The first thing, see, whatever foreign contribution or equivalent amount that we're receiving from our relative was exempted up to 1 lakh. This limit has been enhanced to 10 lakhs. And if we received over and above, then we had to intimate CG in form FC1 within 30 days. Now that time limit has also been enhanced, and now we have the time limit of 3 months. So within 3 months of receipt of such contribution, we have to submit, right, that form. We have read section 3 of FCRA, which places prohibition on receipt of foreign contribution. Then we have section number 4, which talks about the exceptions. So we know that, okay, the persons who are there in section 3, they also, if they are receiving foreign contribution in this exception, they don't need to, they are allowed. Right, so that is something we've already read. You have to just remember the two things which have been highlighted in red over here, 10 lakh rupees in 3 months respectively. Okay. Now, we have section 32, which talks about revision of orders by central government, and thereafter we have a rule 20. Clear? In the same regard, these FAQs have been added. Now, if you look over here, you will be like, oh my God, so many amendments. But trust me, they're the easiest amendments ever. What is there? You can make an application to central government for revision of order under FCRA. If CG has passed an order which are not satisfied with, you have a section 32 wherein you can give an application on a plain paper and ask CG to revise their order. Earlier, Earlier, this was given in Rule 20. Section 32 empowers you to make an application, and Rule 20 tells us how to make an application, which was simple, that on a plain paper you can make an application. Now, this application has been turned into an electronic form. Okay, so it marks the change in Rule 20, and they have issued FAQs to bring better clarity in filing such application. So an application for revision of order passed by competent authority under section 32 shall be made to MHA GOI New Delhi in such form and manner, including electronic form as specified by CG. What has CG specified? CG has issued these FAQs which specifies and gives clarity over everything. Okay, fine. Now, who is eligible to submit revision application? Any person who is registered under FCRA and is aggrieved of the order of CG. So it remains the same. Whatever is written in section number 32, we have read section number 32. We know that who is empowered to make an application. The same person is empowered to make an application. There is no change over here. Next, how can an association file an application? How can you file an application? You can now file an application in electronic form only. So you cannot write on a plain piece of paper and submit the application. No, that is something which is not allowed. Can revision application be sent through physical mode? The answer is no. Applications will be accepted only in electronic mode. What is the procedure to file an application? You have to upload a scanned copy. So you have FCRA web portal. There you go. The website URL is also given, and there you have to upload a scanned copy. So of course you have to take a plain paper and then write the application, sign it, scan the signed copy, and then upload it. So there is no specific format which has been given to us. Is it required to send physical copy also? The answer is no. No need to send physical copy of revision application or any related document to MHA. Is there any format? No. The scanned copy of duly signed application on plain paper is acceptable. Is the applicant required to submit justification? Undoubtedly, yes. Why? What is the reason why you want the government to revise their order? So you have to justify that. That has nothing to do with electronic mode, but still. And what is the fee? The fee is 3,000 rupees, which must be paid through the payment gateway, which is specified by CG. So when you go to that portal, you'll find the link of payment also. Clear? What is the time limit? The time limit stays the same what we have read. It is 1 year from the date when order is communicated. So within 1 year, you have a time period of 1 year to make an application. But now if you want to make an application, you have to go through electronic mode only. Now on a plain piece of paper, no applications will be entertained. Okay. Moving to our last page of amendment, Insolvency and Bankruptcy Code, IBC. Again, very few and very not so important amendments, I would say. Okay. First thing, whenever a financial creditor is making an application for CIRP under Section 7, I hope you remember this. A financial creditor, operational creditor, the corporate applicant himself can make an application for CIRP, which is Corporate Insolvency Resolution Process. Now, whenever you're making an application, you have to serve it. You have to serve it to the corporate debtor as well as to the board. Before you file it with adjudicating authority, we have the adjudicating authority as NCLT, right? So before we file it to NCLT, we also have to make an application to corporate debtor and to the board. How we will do it? By registered post, speed post, hand, or electronic means. Okay, so there are 4 modes which have been given, but before filing it to adjudicating authority, we have to give it to corporate debtor as well as board. Now, when I talk about this regulation 18 and this meetings of committee, this is nothing special which has been given. This is changed. I would say this regulation 18 has been slightly replaced, but the intention, the meaning almost remains the same. RP may convene a meeting as and when he considers necessary. True, we know that. Resolution professional may convene a meeting if he considers it necessary on a request received from members of the committee, and shall convene a meeting if the same is made by members of committee representing at least 33% of the voting right. We know that, right? Resolution professional may place a proposal received from the members of the committee in a meeting if he considers necessary, and shall place the proposal if the same is made by the members of committee representing 33% of the voting rights. So earlier also regulation 18 somehow said the same thing. The crux of the meaning remained the same. Now it has been divided into 3 points, and some language has been changed, right? But not so important. Okay. Now there is an explanation which has been inserted. It is clarified that meeting may be convened till resolution plan is approved in section number 31, or order for liquidation is passed under section 33, and decide on matters which do not affect the resolution plan. This is a common sense explanation which has been now added as an explanation. Supposedly, you go for CIRP, so you have formulated the committee of creditors, and they meet and they decide, they have approved a resolution plan and they have submitted a resolution plan. Can't they meet thereafter? Of course they can meet. Can they change, or can they discuss the matters which results in change of resolution plan that you have submitted? The answer is no. You've already submitted a resolution plan, you cannot change or alter that now. You have submitted it to adjudicating authority, you cannot change it. So you can discuss, you can meet, you can decide on different matters also, how we'll do this, what will happen, whatever you want to decide, you can meet, you can decide. So meeting can be convened according to regulation 18, but you have to keep in mind that you cannot decide on matters which affect the resolution which you have submitted before the adjudicating authority. Clear? Now, insolvency professional, when you are appointed as a liquidator, earlier you had to intimate to the board within 3 days. Now you get the time period of 7 days to intimate about your appointment. And regulation 30. Liquidator, you are also required to verify the claims which you have collated during CIRP but not submitted during liquidation. That means when insolvency was being resolved, people said that this company owes to me also. But when now it is running into liquidation, they have not submitted their claims. So you verify those claims also. Okay, within 30 days from the last day of receipt of claims during liquidation process, and you can admit or you can reject the claim, or whole or in part, or whatever it is, right? So it is the duty of the liquidator to collect the claims, to verify the claims, right? So this is also a new proviso which has been inserted, that this is also required to be done by the liquidator. Okay. See, one thing which I have kept in my mind, that as a student, you cannot get into these intricate details, right? Which sub-regulation, which regulation, where is what you need to remember just before examination, that if at all a question comes in my mind, I should know such things. Right, I should know that, okay, within 7 days they have to intimate, right? So what you must know and what you need to know from your examination perspective, that I have made you highlight, right? I have told you specifically that, okay, fine, this is something which is important and you must keep it in your mind. Okay, so consider those important things and jot down on a piece of paper. There are very few amendments, I would say. On one piece of paper, you can write down all the important things, and then just keep that in mind. Forget about everything else. Okay, this amendment is going to go into which place, which, no, that this is not the right time for you to get into all that things, right? Just note everything on a piece of paper and keep this in mind. Okay, fine. Good. Okay, thank you.